Hello investors. It's been a good month for your portfolio. The index has been a bit flattish to 1% higher. Your portfolio is up about 3%. So it's been a good month. It's a heartening month. And what we find is that the market is stabilizing. It's started accepting or rewarding growth and performance. As I have been sharing with you that 2020 has been a tough year for us because essentially what happened was post the COVID fall, the money or the markets rewarded stocks that were just beaten down. And you will find that the beaten down stocks or the underperforming stocks and sectors did very well. However, this deep value buying is something which does not go on forever. Ultimately, it is growth and performance that gets rewarded. And as markets stabilize, which they have now, you'll realize that our portfolio's outperformance starts. In fact, when I go back and look in time, I find the last time it happened like this was in 2009. And it was a very similar market. We had a very big fall in 2008. This was the financial market crisis. And post that, we had a very sharp pullback, where also in 2009, you will find that the beaten down stocks, just because they were beaten down and they were very cheap, went up initially. However, after that, it was performance of companies. It was the growth stocks which went on to create wealth in the decade after that. So I feel that the same thing is playing out, but as markets stabilize, as companies that are there in our portfolio start coming out with impressive numbers, you will realize that our portfolio's outperformance starts. So it is a heartening fact, and there is historical evidence. Every style, every strategy cannot be a 365-day winner. There will be moments or pockets where you will have relative underperformance. And for us, we feel that that is behind us. Hopefully, as corporate numbers come out, you will realize that it is our companies which really excel in terms of performance, and going ahead, the portfolio will hopefully outperform. So that really is the basis, the genesis of how the month has been, as how we see the market. For the month, we made one switch in our portfolio. We sold a stock called Jubilant Foodworks. It's been a good stock. We booked profits on that. And it's not that I do not like the stock. I feel it's a good stock. However, we have used those funds to consolidate in some of our existing positions. And we have added quantities to our specialty chemical side of our portfolio. This is a sector where we are extremely overweight, and we really like it because we think that this is a sector where a very big mega trend is playing out. People are not talking about these companies or these stocks because they are generally in the mid caps kind of space. But you will notice that we have 4 stocks in our portfolio. We have Atul Limited, we have SRF, we have Deepak Nitrate, and Naveen Fluoro. So that's a fairly massive overweight position in a sector that is a little unknown or underknown, if you'd like to say. Why we feel this sector is a mega trend is because from 2015 to 2018, we saw that as China put curbs on polluting industries, you will realize that a lot of orders started flowing to India. This is, as I said, little known companies, small and mid-cap companies, but this led to a recognition and very good corporate numbers and performance. Now we are transitioning into the second phase, which is the whole China plus one trade, because people are looking for suppliers outside China. And as far as specialty chemicals go, India stands very tall behind China. So we are seeing that orders. And third is where we see that the next leg is going to come, and that is why we are consolidating in these stocks, is that if the industrial cycle turns globally and in India, what is likely to happen is that chemical companies are an integral part of any economic cycle of manufacturing across various industries. And we feel that these stocks or this sector will get another leg up. So what we have done is consolidating in our portfolio. As I said, we have clarity, we like these stocks, and we are looking at our portfolio critically and offsetting something which we feel the money can be used for other stocks or other sectors where the rewards or the returns will be higher. So that really is the basic strategy of what we have done this month. As far as the markets go, they have been flat. We have been saying that we think the markets can be a little corrective in the months going ahead. I think because it's the second wave of COVID. And It's really unknown. We also know that the plus side is the vaccination is on in full swing, but this does lead to a little bit of uncertainty. However, we think it is going to be short-lived. It is going to again be an opportunity for us to reassess our portfolios. The next few months is where the earnings come in, and we will further go into our research, into our process, into a deep dive into our stocks. So rest assured, we are on the ball, and we feel that the time where corporate performance, earnings, and growth is going to be rewarded will revive very soon. The last year has belonged to beaten down and deep value, but ultimately, over long periods of time, over decades, you'll always find that it is earnings and growths where the big money is made. So I leave you with that thought, and stay safe. We are going through a second wave, and fingers crossed. Thank you.